Did you know that in 2021, someone who invested just $1,000 in Solana would have made over $180,000 in less than a year? This is just one of many examples in the world of crypto. But here's the thing, for every Solana success story, there are thousands of people who lost everything on altcoins that crashed to zero. The question we are exploring in this video is, are altcoins your ticket to financial freedom, or are they just an expensive lesson? Let's find out together. So firstly, just as a disclaimer, nothing in this video should be considered financial advice. Okay, so what exactly is an altcoin? Simply put, an altcoin is any cryptocurrency that isn't Bitcoin. The term altcoin just means alternative coin. Bitcoin came first in 2009 and is by far the largest crypto, so everything that came after it is considered an alternative. Altcoins make up over 40% of the entire crypto market today. There are around about 20,000 of them, from popular ones like Ethereum and Cardano, to more obscure meme coins like Shiba Inu and Pepe. At a really high level, altcoins are split into two types of categories. First, there are those that are coins. They are their own blockchain, like Ethereum, Cardano, and Solana. Think of these as highways with their own rules of the road. Then there are tokens. They are built on existing blockchains. Think of these like cars that drive on someone else's highway. So you might be wondering, are altcoins just trying to copy Bitcoin? In almost every case, no. Most of them are trying to solve problems that Bitcoin can't, or offer new features. For example, some focus on faster transactions. Others enable smart contracts for apps and games. Some prioritize privacy. And some are just based on dog memes like Doge. Understanding these differences is your first step to figuring out which altcoins might be worth your attention. Now here's what excites most people and gets them super hyped: the potential for massive returns. For example, when Ethereum was first publicly traded, it was $3 a coin. It then went to over $4,800 at its peak. Solana, another coin, went from around $1 to over $260. Using the Ethereum example, a $1,000 purchase of coins at $3 per coin back in 2014 would be worth $1.6 million at its peak in 2021. But massive returns aren't the only reason altcoins might be gold mines. They also represent exciting new technology that could change how we do things online. Now here are a few real-life examples. Ethereum has smart contracts, which are agreements that run automatically when certain conditions are met. An example in real life would be the automatic payment of royalties to a music artist, calculated based on the stream time of their songs. Another example is Basic Attention Token, which rewards you for viewing ads while browsing the internet. This flips the traditional advertising model on its head. And then there are the DeFi coins, which stand for Decentralized Finance. They aim to create financial systems that don't need banks. They allow lending, trading, and earning interest, all without a middleman. Many investors and traders purchase coins with the mindset that altcoins are trying to solve real-world problems, and as a speculative investment. Many do solve real-world problems, or aim to, with some examples being making transactions cheaper and faster, creating new ways to verify digital ownership, building internet services that users control, not big tech companies, and allowing people without bank accounts to access financial services. When an altcoin actually delivers on these promises and it gains adoption, its value can increase dramatically. That's the goldmine scenario. But unfortunately, that's not very common. The more common scenario we'll discuss next. Now, I don't want to spread fear, uncertainty, or doubt, or FUD, but for every altcoin success story, there are dozens of disasters. Let's find out why many altcoins end up being traps. First up, there's the extreme volatility. Altcoin prices don't just go up or moon, they swing wildly in both directions. A coin can drop 50% in a single day based on technical reasons not obvious to the public. Unlike the stock market, crypto trades 24/7 with no circuit breakers to stop crashes. If we take a look back at history, we can see a few parallels to the current crypto market, and they do provide a cautionary tale. The first parallel is the tulip mania in Holland in the 17th century. At its peak, a single rare tulip flower could trade for more than the cost of a house. All kinds of people jumped in on the craze, but the bubble burst, leading to financial ruin for many who had bought at the top or were heavily in debt. And a more recent parallel is the dot-com bubble. In the late 90s to early 2000s, there were many new tech startups with unproven business models and little to no revenue, yet achieving sky-high valuations. The bubble eventually burst in 2001, leading to a significant market drop and the failure of many internet companies. However, the aftermath did also see the emergence of some of today's big tech giants such as Amazon and Google. Secondly, there are scams everywhere. The altcoin space is absolutely crawling with scams. Here are some of the most common ones. First, there are the rug pulls. Developers create a project, they build hype, they take investors' money, and then disappear overnight, taking all the funds with them. The Squid Game token is a famous example. It went from $2,800 to $0 in minutes when the creators vanished with millions. It's recently been identified that on the Solana platform alone, around 98% of new tokens are rug pulls. Then there are the pump and dumps. Groups coordinate to buy a coin all at once, driving up the price. They hype it on social media, and when unsuspecting investors buy in, the original group sells everything, crashing the price. And finally, there are the copycat scams. Fake versions of legitimate projects with nearly identical names or websites, designed to trick you into sending your money to scammers. The third reason altcoins can be traps relates to meme coins. So some meme coins like Doge or Shiba Inu are based on internet jokes, but they don't really provide any useful technology. While some early investors made fortunes, these coins typically have a number of factors working against them. These include the fact that they have no real utility or purpose, that its value is based entirely on hype, that there is an extremely unfair token distribution, so for example developers may hold a huge share of it, and there is a high likelihood of it crashing once the joke gets old. And the final reason that altcoins can be traps relates to regulatory uncertainty. Governments around the world are still figuring out how to regulate crypto. A single announcement can tank prices overnight. For example, in the US, the SEC is constantly investigating whether altcoins are unregistered securities, which could lead to legal problems for projects and exchanges. For example, in 2020, the SEC sued Ripple, arguing that it was selling their token XRP without a registered security status. This tanked XRP's price. Now, a lot of what we covered off is quite scary, but in this space you should be cautious. Next, I'll show you how to navigate these dangers. So how do you tell if an altcoin is a potential goldmine or a trap? Basically, don't ape in without doing your own research. So here are a few suggestions which you could use. Firstly, you can check the fundamentals of the project. For example, have a read of a white paper. Can you understand what problem they're trying to solve? You can also visit their website. Is it professional, or is it full of hype and grammatical errors? And you can have a look at their roadmap. Have a look to see if they have clear and realistic goals. You can also investigate the team. Are team members public with real names and backgrounds? If they are anonymous, this can be a really big red flag. And do they have relevant experience? Thirdly, you can examine the tokenomics of the coin. This includes determining what total supply of tokens is, figuring out how tokens are distributed, understanding if there is a clear reason as to why tokens need to exist, and noting if developers hold more than 50% of the crypto, because if they do, they could dump it and crash the price. Fourthly, you can see how they are interacting with the community. So for example, check their social media. Is there real discussion about the project, or is it all just shilling and price hype? Have a look at their GitHub, which is a place where code updates are publicly notified. Are developers actively working on the code? If there is a lot of development, this is a good sign. And finally, you can do security checks. Has the project been audited by a reputable security firm? And has it been around long enough to prove that it's not a quick scam? Remember, if something sounds too good to be true, it probably is. Be especially careful when you see promises of guaranteed returns, extreme urgency or FOMO, fear of missing out, projects that are hard to explain, and anything being heavily promoted by influencers. They might be being paid to shill it. Remember, if you're completely new to this and you don't know what to buy, it's usually safer to stick with what is established. Look for coins that are in the top 20 to 30 by market cap rather than brand new projects. So, are altcoins a goldmine or a trap? The truth is, they can be either. Some altcoins represent incredible innovation and opportunity, whereas others are disasters waiting to happen. Success depends on a number of factors, such as doing your own research, managing your risk, controlling your emotions, and thinking long term and about the real use cases. Remember, even the most successful investors in a space expect many of their altcoin picks to fail. That's why diversification and proper positioning sizing are so important. Basically, don't take on more than you're willing to lose. If you take one thing from this video, there are no guaranteed get-rich-quick schemes in crypto. Approach altcoins with caution, knowledge, and patience. Thanks for watching. If you found this helpful, please hit that like button and subscribe for more content.